What's up, YouTube? Dougie Chong here, and today we're breaking down Nike stock, ticker symbol NKE. Before we jump in, smash that like button, subscribe to the channel, and turn on those notifications to help the YouTube algorithm push this video out to more investors just like you. It really helps the channel grow. Alright, we're back. Let's start with what Nike actually is, because this is not just a shoe company. Nike is a global sportswear giant that designs, develops, and sells athletic footwear, apparel, and equipment, led by the flagship Nike brand plus Jordan and Converse. They dominate categories like running, basketball, global football, soccer, and lifestyle sportswear, selling through both their direct-to-consumer channels and a huge wholesale network of retailers worldwide. In simple terms, if it's on a field, a court, a track, or in the gym, Nike wants to be on your body or on your feet. Now let's talk about the stock itself. Where is Nike trading right now? As of the latest quote, Nike is trading around $44.94 per share. That puts the company at a market cap of roughly about $66.4 billion. On the valuation side, Nike is currently at a price-to-earnings ratio of about 28 and a price-to-sales ratio around 1.9. That means investors are paying just under 2 times annual sales and about 28 times earnings for this business at today's price. Dividend-wise, Nike is yielding roughly 3.65% at current levels. So you're getting a modest income stream while you hold the stock. Now let's break down the most recent earnings, because this is crucial for where the stock goes next. Nike's latest reported quarter with full results is Q3 2026. They delivered revenue of about $11.28 billion, slightly ahead of expectations of roughly $11.23 billion. Earnings per share came in at 0.35 versus Wall Street estimates of 0.29, so they beat on EPS as well. On the call, management highlighted that revenue was basically flat on a reported basis and down about 3% on a currency-neutral basis, with Nike Direct declining while wholesale grew modestly. Gross margin declined about 130 basis points to 40.2%, largely because higher North American tariffs hit margins by roughly 300 basis points. They also took a $230 million severance charge as part of restructuring to reset their cost base, especially in supply chain and technology, aiming to make the cost structure more variable and more flexible going forward. That hurts earnings in the short term, but is meant to boost profitability as we move into fiscal 2027 and 2028. Guidance-wise, Nike said they expect revenues to be down low single digits versus the prior year over the next few quarters, with strength in North America offset by intentional pullbacks and marketplace cleanup in Greater China. The big message was that gross margins should remain under pressure near term, but are expected to inflect higher around Q2 of fiscal 2027 as the tariff headwinds and restructuring costs roll off. So, summary. Small beats on revenue and EPS, but a story of pressured margins now, with management promising a profitability inflection in the next year or so. Now, let's talk about what actually drives Nike's results going forward. On the opportunity side, Nike still has one of the strongest brands in the world in sportswear, with deep relationships across athletes, leagues, and cultural moments. Think World Cups, Olympics, NBA, big running events. They're leaning hard into innovation in performance running, global football, and basketball, plus lifestyle sneakers that keep the brand culturally relevant. They're also rebalancing between their Nike Direct business, digital and stores, and wholesale partners. Direct gives better margins and more control over the consumer, but the company realized it pulled back from wholesale too aggressively and is now re-engaging key retail partners to drive more balanced growth. The resale market for popular shoes such as Jordans used to huge, but now is in a bit of a slump. On the risk side, we've got tariffs and geopolitics. Higher North American tariffs have been a big hit to margins and are expected to remain a year-over-year headwind until around the first quarter of fiscal 2027. China. Nike is intentionally reducing sell-in and cleaning up the marketplace in Greater China, which means near-term revenue declines in a historically important growth region. Competition and promotions. The athletic apparel space is crowded. Adidas, Puma, Under Armour, Lululemon in athleisure, plus newer direct-to-consumer brands. And a promotional marketplace pressures pricing power. So this is not a risk-free sleeping giant. It's a premium brand working through a messy macro and competitive environment. All right, let's answer the big question. Is Nike a buy at around $44.94 a share with a market cap near $66.4 billion? Here's my take. On the bullish side, you have an elite global brand, a long history of execution, a solid balance sheet, and management actively restructuring to get margins back on track. You also get a reasonable dividend around 2.6% that pays you to wait. On the bearish side, you're paying roughly 28.05 times earnings for a company guiding to low single-digit revenue declines in the near term and facing real tariff and China headwinds. That's not exactly a deep value setup. So, in my opinion, at today's price, I would call Nike a quality hold watch list name, not a screaming strong buy. If you're a long-term believer in the brand and you're comfortable with the volatility, slowly accumulating on weakness can make sense, especially if we saw the multiple compress further or margins clearly inflect the way management is promising. Personally, if the price drops a bit, I may start to acquire some shares, but this is not guaranteed. Execution on this win now turnaround, margin recovery, and China strategy remains critical. If they stumble, that premium multiple can get punished hard. An important disclaimer, I am not a licensed financial advisor. This video is for entertainment and educational purposes only and does not constitute legal or financial advice. Always do your own research and talk to a professional before making investment decisions. If you found this Nike breakdown helpful, drop a like on this video and hit that subscribe button. It really helps with the YouTube algorithm and lets me keep making deep dive stock reviews for you. Let me know what you think about Nike stock in the comments below. Are you buying here, holding, or staying far away? I want to hear your thesis. Thanks so much for watching. I appreciate every single one of you. Subscribe, leave a like, and share this with a friend who's looking at Nike or the sneaker space in general. Enjoy the rest of your day and see you in the next video.